Well, let's bring him in. Yardeni Research President Ed Yardeni. Ed, I like that you wrote that the market is moving in FEMO, not FOMO. So what is
Right.
FEMO?
FEMO is fabulous earnings momentum, which is exactly what we've had. And fabulous earnings momentum is the prescription for a earnings-led melt-up, and it's much more sustainable than FOMO, which is fear of missing out, in which people buy irrespective of what's going on with earnings, and so you get very elevated PE multiples.
So let
So
me.
the market
I'm
is
sorry.
reasonably priced.
I'm sorry.
The market is
I didn't mean
reasonably
to
priced.
jump on you there.
Go ahead. Go ahead.
A cynic though would say, okay, you know what? You look at the spike in these earnings and the guidance. A cynic would say, okay, that's phenomenal. They're soaring, but it's unsustainable. What do you say to that?
Well, I think that a lot of this has to do with the controversy about AI. For a while there, the controversy was whether these companies are spending too much on AI infrastructure and they'll never get a return on it. But I think what has to be considered is that AI is all about the data revolution, which actually started in the mid 1960s with IBM mainframes. And the whole point of the digital revolution is to process as much data as we possibly can, as cheaply as we can, as fast as we can. And so we've certainly made a lot of progress in that regards. And there's never going to be a shortage of data. The more data we can process, the more data we're going to be processing.
Yeah, I think that's one of the ironies here with this GPUs, CPUs. So the GPUs are so good now that we need a lot more CPUs, but the CPUs are going to create so much more data that the GPUs got to retrain on them, and it's a virtuous cycle.
Yeah, virtuous cycle, exactly.
Goldman upped their target this week. I think they were 7,600. They're at 8,000 now for the end of the year. I know you had like 10,000 for the end of the decade. Is it time to sharpen the pencil? I want to break some news here. Yardeni says 11,000. Yardeni says 12,000.
Well, I'm going to stick with 10,000 for right now. I'm comfortable with that. I did take a lead there for a while with the S&P 500 by the end of the year. I had been using 7,700 a couple of weeks ago. I raised that to 8,250. I see that Goldman just a few days ago raised their target up to 8,000. So it's kind of catch me if you can.
Yeah. Hey, by the way, what about gold? We haven't talked about that in a while. You posted a few gold charts this week. It's a little frustrating for some people because the inflation has been in the news, and inflation was supposed to drive gold higher.
I think you just have to trade gold technically. I don't think that the fundamentals that people think are related to gold have been working. And yesterday was a very important day. The gold market tested an intermediate uptrend. They tested the 200-day moving average. And I think those held. And they're obviously doing it on the perception that we're going to have some sort of ceasefire and then maybe a peace, a continuing ceasefire and peace. So gold is not behaving. You would think in a war, gold will be going straight up. That wasn't the case at all. And peace now seems to be bullish for gold.
Yeah, it's so weird. But the bottom line is, though, it feels though also that it's hit a bottom and it's starting to try to find the sea legs again.
I think so.
Let me ask you about the recession odds. You posted this week. They're starting to decline here a little bit more. The real question, though, isn't this? It segues into the bigger question. Where does this leave the Fed? Could a rate cut or rate cuts be in play before the year's over?
Yeah, well, the economy is looking better and better. I think had a lot of weakness in the fourth quarter of last year and the first quarter of this year was actually weather related. In addition, of course, we had the government shutdown in the fourth quarter. I think Chauncey Gardner once said in the spring there will be growth. And I could see the second quarter numbers coming in between 3.5% and 4% growth. That being the case, then I think the Fed has to focus on its mandate on the inflation side. Inflation risks are higher than risks of lower lower employment. So all in all, I think the Fed at the June meeting will move to a tightening bias, and then I think in July they'll actually increase by 25 basis points. The market may freak out about it for 5 minutes, and I think it'll be a buying opportunity.
All right. By the way, being there, Peter Sellers, that's in maybe my top 20 movies, maybe top 30 movies. Great reference.
Right.
I can't let you go without asking you about stock market mania in Korea. 50 million people, 100 million accounts, just selling insurance policy, old people, young people. They just had the best birth quarter in their history. They're just excited over there. Are they too excited?
Well, they're basically excited about just a couple of memory chip stocks. And so, yeah, I think it's getting a little out of hand, and there'll probably be at some point some sell-off. I mean, I've been doing this for a while. You've been doing it for a while, and parabolic moves always make us nervous. The problem is the earnings are justifying it.
Yeah, I read somewhere, it was Michael Hartnett said he went to London and talking to some investors out there, some bankers. They said, we're invested and paranoid. So if you've been around for a while, I think that's all of us, right?
That's all of us.
Hey, have a great weekend, Ed. Thank you very much, my friend.
You too.
All right. All right, coming up, folks, stocks, ratings, prices, they're going through the roof on just about everything. And the thing is, you want to be positioned in your portfolio. We're going to continue to talk about how you can stay one step ahead of Wall Street here on Making Money. Be right back.